Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today we're talking about a new position for the E-Toro portfolio. So for those of you who are new to the channel, I do run a portfolio on E-Toro, just a straight up equity type play. Generally speaking, we do have the ability to buy other assets, use leverage and hedge. But generally speaking, this is a more basic fundamental fund that I run, and I also run a derivatives trading fund, which is outside, and I haven't spoken about that much. Today we're going to talk about a new position, and it is in the URA ETF, so global uranium exposure. I actually prefer the URNM, the North Shore Uranium ETF. However, that's not available on eToro, and so for the eToro investors, this is the way in which we will be looking to play the uranium space. Finally get a chance to do it. I've been wanting to do it for a long time in eToro, and now we finally get the opportunity. So we're going to do a quick catch up. We're going to do a macro review from the last video that I made, and I'll speak about the significant developments that have occurred, the news over the last quarter, let's call it, and how we're looking to play the space moving forwards. So a quick recap. Okay, uranium is the highest, or I should say nuclear power is the highest energy return on energy investment that we currently know of as humans. So for example, if you put 1 unit of energy in, you will get roughly 100 units of energy back out. Okay, very important to think of energy return on energy investment in addition to financial return and energy investment return on that capital expenditure. So to give you some context, if you look at wind and solar power, even if you use the most generous calculations, which are always put forth, Göring and Rosenzweig estimate that 1 unit of energy in might get you 1.5 to 2 units of energy back out. Okay, and that is really, it's just not going to cut it for us moving forwards. Energy is GDP, okay? GDP is energy. If we don't have energy, there will be no GDP, there will be no production, there will also be no population growth. We have relied on energy growth for our population growth since we've had this kind of hockey stick growth in terms of population that has not coincided with our ability to get higher returns on energy invested. That has been because of our ability to get those high energy returns. And so it's very, very interesting. We're looking at ways to transition our fuel sources into the future because lots of people have decided that's what they want to do with their own particular agendas, and that's okay. Today, we are going to not debate the merits of that per se. We're going to look at ahead of the curve where we think the ball is going, and we're going to be there waiting to do the old Ruud van Nistelrooy and tap it in to score an easy goal. So 1 uranium fuel pellet, okay, roughly the size of your fingertip or a jelly bean, can give the equivalent energy of 17,000 cubic feet of natural gas, 149 gallons of oil, and 1 ton of coal. So again, a very, very dense energy. And so for the population curves and the income growth curves that we're experiencing in developing and emerging nations around the world, most of the world's population is starting to actually make some money. And so when you hit this this curve in the population growth where poorer people start to move from being poor towards middle income or lower middle income, their energy usage absolutely explodes on a per capita basis. So we're interested as a species at the moment. We're obsessed with cutting down carbon for some reason, or for many reasons. It's not as clear cut as most people would make it out. But anyway, it is a good idea to use cleaner sources where we can. And so if we look at the comparisons of life cycle carbon emissions for all the various fuel inputs that you can see here, nuclear really stands out. I mean, it's got basically next to no emissions, and it's extremely efficient, as we just mentioned. And it's also, contrary to popular belief, it's also one of the safest fuel sources, given the modern technology that we have now. Okay, so this is the slide from last video. Let's talk about supply and demand and see what has or has not occurred. Demand is set to explode right at the time where supply is scraping the barrel. Nothing has changed there. Demand has only started to move onwards and upwards to the right. Supply still is, there's been no new supply come online. Spot and term prices have been smashed, and they have started to recover, as we'll see in a moment, but we're still well below the incentive price for new production to come online. Above ground stock has been used up, and a lot of it has been taken off the spot market from the Sprott Physical Uranium Trust. The price is still below the cost of production, and with inflation, the cost of production is continuing to rise higher. So uranium still has quite a bit to go in terms of meeting its cost of production. Demand increasing with green energy mandates, as we mentioned. The small modular reaction is a game changer in terms of the technology and making it very safe to use. Old reactors are coming online, new ones being ordered, and those leases that were set to expire have been extended by many governments around the world, which is only going to add to the demand. Developers are dipping into the spot market, or the Sprott market, and the Sprott Physical Uranium Trust continues to eat away at the available supply. So let's look at the physical yellow cake. Okay, so these are the U308 futures over the last 13 or so years. So you can see a lot of volatility. We went through a horrible bear market here, and now we're starting to come out the other side. Okay, moving out over a lower time frame over the last year, I've physically drawn in, because it's hard to see on this picture, the movements of the futures of yellow cake. Okay, so towards the end of last year, we had this huge run up in uranium price. Everyone was getting super excited. My juniors were starting to double and triple and quadruple on the back of movements in uranium. Momentum fell off, but we reached a higher low, and we continued to move up, and then to a higher low, up to a higher low, up to a higher low, which shows that momentum is really gathering in the space. We're looking at around about $56 as of the time of recording for a pound of uranium. So what's new? New developments. Obviously, we've had this horrible situation in Ukraine. What does that mean in terms of the supply-demand dynamics for uranium? So sanctions and or refusal to export, they're essentially the same thing in terms of supply, means that those supplies coming out of Russia for enriched uranium will obviously be more and more under threat. That is a huge development, because enriched uranium from Russia forms roughly 20% of the US supply. So if you have 20% of your supply go offline, I mean, and we were already in a tight market, that really starts to put upward pressure on prices. We've seen European governments now changing their tunes, including the Germans, who decided for some reason that they wanted to get rid of their nuclear. Now they've realized that having solar and wind panels in places where you have very little sun is not going to cut it in terms of delivering the power that they thought. In addition to that, those types of renewable energy sources, they can't supply baseload power. You need a certain amount of power going through the grid for baseload, and with intermittent sources, you just cannot do it. So we've seen them really start to open the door to accepting nuclear as an ESG, or environmentally friendly fuel source. We've seen Japanese fleet starting to come back online. China's ordered a heap of new reactors. So as we build that out over the next decade, the demand picture looks very strong. It's the supply that we'll all be sort of scavenging over. Uranium mines operate in many countries, but take a look at this. More than 85% of uranium is produced in 6 countries: Kazakhstan, Canada, Australia, Namibia, Niger, and Russia. So if you think about, this is where most of the supply is coming from. Now, Canada, Australia, and Namibia are quite good jurisdictions, so we'd feel reasonably comfortable about those. Kazakhstan, with everything that's going on in Eastern Europe, Kazakhstan had a lot of riots recently, about a month or two ago, and they really rely on the Russian military to be able to come in and ensure security of the state, and obviously the associated power plants and mine developments. So we're starting to see this cessation for East and West. What's that going to mean for the world's uranium supply? Russia, obviously, there's sanctions and all sorts of things going on over there, and Niger is a basket case in terms of jurisdiction. So these guys here, I mean, it's a pretty interesting lunch table when you think about the fact that how sure are you over the security of your supply when it comes to uranium? And if you've got these types of these types of dubious jurisdictions, who knows what would happen? There could be a plenty more volatility in terms of supply crunches moving forward. The utilities haven't really started to renegotiate like I thought they would yet. They still seem to be asleep at the wheel or take out a lot of spot supply. They do need to have at least 2 years worth in reserve holdings. So they're going to have to really start to come to the fore and up the ante in terms of signing new contracts if they want to have their supply needs met and stay secure. So we're all waiting for this price to start the production. Those of you that are asking me about the junior uranium miners and things like that, well, the spot price really has to rise. These juniors it'll be interesting to see how many, if any, will get to production. The only juniors that I know of last cycle were the team at Paladin under John Borshoff that took an exploration site, developed it, and actually got to production. There are a heap of interesting developers, and I own some of them. I don't necessarily expect all of them to get to production, though. I think part of it will be a narrative trade, so we'll need to watch that and keep an eye on it. In terms of sticking with the fundamentals, your producers need stable prices above. That was $60. With inflation, that's probably more like $65 to $70 a pound now. And the developers, the guys that have these land sites that they want to turn into developing mines, John Borshoff last year was saying $80 would be a minimum incentive price for them to come to the table. But again, with inflation, that might be $85 or $90 a pound now, which means that there's still a long way to run for the spot price. Sprot's modelling has been upgraded to £60. That was back in the last quarter of last year. If you look at Sprott Equity Research, they have a matrix with all sorts of different assumed prices and all sorts of different valuations to net asset value. The fuel costs still make up only about 6% of the reactor expenditure, which means they're very inelastic demand, and so these reactors are very insensitive to the price. If you spend millions of dollars on your nuclear reactors and the cost of uranium doubles, well, it doesn't mean anything. Without the yellow cake, you're not going to run a reactor, and you've already sunk millions of dollars into this power plant. So you're not going to be too sensitive to the price of uranium. Capital cycle, the funds are starting to return. We have seen inflows into the ETFs, the URA, and the North Shore Uranium Trust. And that kind of acts as a flywheel, boosting up prices, not just for the physical, but also for some of the listed companies inside the ETF's holdings. This is really important. So physical, we know it's below the cost of production. So trading at $56 is a long way short of, let's call it 65 US dollars a pound. Would you agree with that? Up to you. And so where you've got this commodity that's still depressed, still below the cost of production, and it's down 58% from its all-time high, that is a strong buy signal for me personally. If we look out a little further, so this is still the uranium futures, but look out to, say, March 2026, you'll see up there, the futures market is in contango, okay? So you're looking out and seeing what this particular March 2026 contract has done. And so it's trading around $63, which is obviously above $56 at present. So when you've got this future price higher than the current spot price, the market's said to be in contango. Okay, so in future, people are expecting uranium to cost more than it currently does at the moment. And that's a normal, healthy futures market where you've got to take into consideration cost of storage and risk and time premium and all that sort of thing. You should be paying more to receive a commodity in the future than you are in the present, unless they're expecting an oversupply, which is clearly not the case. That's part of the reason that's made oil such a magnificent trade, is because the market's actually been in backwardation into the future. So out to 2026, the futures price is lower than the current price. And yet with the supply dynamics, I don't personally believe that there'll be enough supply coming online by 2026 to justify that. I think it's going to be more expensive. So there's a trade opportunity there for me. Okay, in terms of bringing it back to the E-Toro portfolio, we're positioning in the ETF because it's the best way to play it for me. That you can buy, I believe, Cameco, but I think why bother with that when you can get access to all of this sort of broad spectrum of producers. So the two biggest producers in the world, Kazatomprom, you see there, makes up 5% of the net assets, and Cameco is already 24, call it a quarter of the holdings of the ETF. So let's buy the ETF, and we'll get exposure to the physical at 6%, and we'll get exposure to some developers with really promising mine sites. So NextGen in particular makes up almost 6% of assets. Energy Fuels at Paladin have the Langer Heinrich mine that they can bring online fairly quickly. Denison will be a bit more of a speculative one. Then you've got your Explorers, and Yellowcake is similar to Sprott Physical in that it is a trust that holds actual uranium octoxide. So it's a basket of diversified assets across the uranium sector. I think it's a very good way for the average person to get exposure to the sector, and without potentially falling prey to jurisdictional risk. So Kazatomprom is the biggest and the best producer, but obviously, well, we can't get access to it on eToro. It's not listed, but obviously you run more jurisdictional risk being in Kazakhstan. Paladin is quite good. NextGen is good, but they're not in production. So you take into account time risk and production risk. If there's something that goes wrong with a mine, then you'd have all your eggs in the one basket. And so I think that although I don't normally go with ETFs, it does make sense with this as a special situation. So as you can see, we've got a mix of the producers, the developers, the explorers, and the physical storage trusts. And so some of these down below, you can only see the top, I think, 10 holdings on this chart, but there's a lot more in the ETF. Some of those smaller juniors could be absolute moonshots, and that will disproportionately affect the performance to the upside of the entire ETF without, as I said, having to overly expose yourself to one particular risky position. Thanks for watching. I hope you enjoyed it. If you haven't already liked and subscribed to the channel, I'd greatly appreciate that. And if you're interested in a value fund that also involves hedges, shorting, and going long commodities, as you've seen, then click on the link in the description and you'll be taken to the E-Toro portfolio. You can choose to copy it if you wish, or simply add it to a watch list. It's totally up to you. And a disclaimer, I'm not a financial advisor and definitely not your financial advisor. I potentially have no idea who you are, and so I can't recommend anything to you. I don't know what's appropriate for your circumstance. Please understand, everything on this channel is just my opinion and what I'm doing. I really enjoy just sharing and my thought process and thinking out loud. It doesn't mean that I'm always going to be right. It doesn't mean that it's advice, okay? It's just my opinion. I could be wrong, so please understand that as a fact, and please understand that you need to take responsibility for your own decisions and do your own due diligence. Okay, I hope I made that super clear. Having said that, of course, I do hope you enjoyed the video as much as I do sharing my thoughts and what I'm doing, and I hope to see you in the next video. Leave a comment if you have questions. Otherwise, I wish you a very good day.